Welcome to Option Trades Today. I'm Tony the Baptiste, and I've got a trade idea for you today. Is it November already? November 2nd, 2023. But let's first take a look at what's going on with the market. Even the S&Ps hanging out near their highs, up 63 handles, 63 and a half points on the E-mini S&Ps. You can see they're just a couple of dollars off of their highs. NASDAQ up 215, Russell up $31 and change. The Dow up 378. They're all up around the same. Volatility in by 3.5%, 60 cents to 16.75. And what a great 4 or 5 days it has been for selling volatility. But that seems to be all over now. When you take a look, if you go to our watch list here, and you see everything with an IVX 5-day change, you'll notice that when I was able to do this before, it was pages and pages of green on the IVX, the IDX 5-day change that you have over here. That's the implied volatility of these stocks, their change over the last 5 days. You would see that every stock basically had high implied volatility rising through the previous 5 days. Now you've only got a handful of the hundreds that are on this page. So I decided to take a look at something that you've all asked for when you give me feedback on the podcast on YouTube. When you write something in, you always talk about this SPX trade that I've been putting on. How about you put on both sides? That's my patent pending broken wing butterfly. I say that with tongue in cheek because obviously I didn't invent the trade, but it's worked out very nicely on this podcast. What does it typically like? Well, it likes high implied volatility. IV rank of 25 and SPX. If I had asked you this question back on 1013, where I have my cursor right now, you would say, yes, implied volatility IV rank. This number over here in the left-hand corner was very high. But since we went up into the 50s in volatility or IV rank and SPX, you might say, hey, it's been cut in half. Everything is relative. Everything has to do with price. So when I first looked at this trade, I said to myself, you know what? I really want to do a broken wing butterfly to the upside. So let me show you what I did. I go to December AM options. Could you use the ones that settle the in the morning? Sure. In the afternoon or night? Sure. You can use any ones you want. I like to go, because SPX is very liquid, I like to go to the AM. They seem to have the most volume. Let me show you what I did. I did the opposite of what we usually do. We usually make this a very a bullish trade, not very bullish, but omnidirectional. I'm going to go to the upside. My first inkling was to do this, and it's a standalone trade. I like it just the same. Because there's put skew in all ETFs like SPX, market related, usually the market goes down a lot faster than it goes up. But you can see here, SPX is really expanding today. I decided to get a little bit short, and then I changed my mind. So let me show you what I got. I'm buying one of the 45 calls just to save some time instead of going $50 wide because of that call skew or the lack of there being call skew. Well, I'll go $50 wide just to show you, because usually I do these $50 or $100 wide. So I usually go 4,500. I usually go around the 20-ish delta. I have the 17 delta now. There are so many within just a few ticks of each other. 4,500, 4,550. And then I would go up to the 46.50. You'll notice that you're going to use about $5,000 in buying power on the right-hand side. We did this same trade on the put side at around the same level. And you'll notice this is trading for a debit. A debit. We were able to do these on the put side for a credit of $3 and $4 credit. That's because of call skew. In call skew, naked options trade expensive, spreads trade cheap. And since we're selling a very wide $100 wide spread here, 45.50 to 46, it trades very, very cheap. So what am I going to have to do? I decided to make it a little bit tighter. I'm going down to 45.30. So I'm only $30 wide on my call spread that I'm buying. and I'm going to go $90 wide on the call spread that I'm selling. I'm going up to 46.20. And I was able to do this spread for $2.75. $2.75 just a moment ago. Don't worry if you can't get 275, because the put spread that I sold is probably going to be more expensive. You'll make up the money there. Let me go through the rest of my trade, okay? So this is what I did on this side. I'm using about $5,700 in buying power, which is something that we have done in SPX numerous times. On the put side, used around the same amount of buying power. It has a -3 short deltas. It picks up $12 in theta decay a day for that risk, and it has an 83% pop. I got filled at 275. That's one half of the trade. You must do this trade since you can only put in 4 legs at a time. You must do this trade as 2 different trades, 2 separate trades. So I got filled at 275. You put, if you're getting this where it is now, maybe you put it 10, 15 cents higher and then walk each trade down. Let me show you the opposite side of this trade. Well, there it is right at 275 now with even the S&Ps up 60. All right, so that's my one trade. I'm already using, remember, I'm already using $5,700 in buying power. Oh, by the way, let me put that back up there for a minute. There's a trade that we put on. Look what your break even is. Your break even is above 45.60. Let's take a look for a moment where SPX was at its highs. If you look here, that right at its highs, if the market over the next 42 days doesn't climb to new highs, this trade should work out just fine. So I've got my break evens, or my break even, right at or around new highs for the year. So if you think that there's still some trouble brewing in the market and we're not going to make new highs, maybe this is a type of trade that would fit for you. Again, it's the 4,500, 4,530, 46.20, using $5,700 in buying power as a standalone trade. I have to love it. It has a good pop of 83, and it was going to be the trade I was going to keep as a standalone. But you know what? I didn't know where the market's going. I really don't have a feel for it at this moment, with volatility contracting so much and the market going so much higher over just the last couple of days. I thought we could have a little bit of a breather, but what do I know, right? We're kind of in no man's land. We're not near the highs. We're not near the lows. So let me put on both sides and make everybody happy who gives me some nice comments here. All right, so let's go again to the put side. And on the put side, I'm going to go, to save a little bit of time, I'm going to use the same widths and the same amount of money. So I'm going to go to 40.30 on the put side. I'm going to buy one of those. I'm skewing it a little bit to get a little bit short delta. I really think I'm just, having some fun with myself, because the couple of deltas that I'm going to be short doesn't really mean anything. So 40.30 on the put side, I'm going to buy one of those. Obviously, if I'm going to use the same amount of buying power, I'm going to go down to the 4,000s. So I'm buying one of the 40.30, selling 2 of the 4,000s, and I'm going to go down to 39.10, which makes it the same distance away, meaning $90. And I'll be using that same $5,700. I got filled on mine at 315. So maybe you'll be able to get filled even better than me on both sides of the spread. Maybe you get the call spread a nickel or a dime worse, or maybe the same price, and maybe on the put spread you get even better than me. I got filled at 315 on the put spread. So I did my whole package. for $5.90, and you can see again it has a little bit higher pop, 94. My break even is down at 39.70, just under. Again, for those chartists that are here, we'd have to make a significant new low over the next couple of 40 some odd days, back down to 39.70 area here. So I've got a whole full standard deviation on both sides before I get into any trouble. Of course, if we close on either, and again, if you close on either short strike, 4,000 on the put side And on the call side, you'd be looking at 45.30. You could make $3,000 plus the credit you received. So you could make yourself significantly more. You could make yourself almost $3,600 on $5,600 of risk. Now, I think that's completely unreasonable. What am I looking to make on this trade? Well, when I was directional, these trades would work sometimes within a week or less, and I'd be taking $1 out of these trades. I'm collecting a little bit more credit here, $5.90 total on the trade. So I might, and it's going to be obviously slower moving. You can see here that I have 2 positive deltas. I'm a little bit shorter deltas on the call side. I'm making $7 in theta decay. On this side, 93% pop on the put side. So for me, I might be looking to take in possibly, $1.50, $2. Maybe it's going to take a longer amount of time because you have both sides. It's almost like a covered call on steroids. SPX is a very big product, 10 times the size of SPY. So you're going to want to be, if you're trading smaller, you're a one contract SPY trader, this is probably not the trade for you. You need to be a 5-10 lot trader in SPY to even consider a trade of this magnitude or this size. All right, listen, I'm Tony Batista for Tasty Live, but I need you to do one thing I ask you all the time at the end of my videos. I hope you're watching to the end like this. Leave me some comments down in YouTube. I would love to hear from you, maybe your thoughts on the trade or anything else like that. But please do me a favor, open up your account, move your account, transfer your account. We've got a new feature on there for referral program, even just referring a friend to Tasty Trade. If they open an account within a couple of months, you can read the fine print. I think you get $250 and they get to take advantage of all the benefits that we have on the platform. And I think they get a little cash just for opening an account. But check it out.